HELOCs offer a unique way to borrow against your home equity for anything from debt consolidation to home improvements. In this video, we'll explore how HELOCs work, their flexibility and interest rates here in the UK. Have you been paying off your mortgage for years, accumulating a good amount of equity in your property? One of the options to release some of that equity is to consider a home equity line of credit, or a HELOC. This credit product allows you to borrow against the equity in your home, and unlike other credit products, a HELOC is more flexible as it runs for 30 years, with the first 10 years allotted for spending and the next 20 for the repayments. HELOCs do not have early repayment fees, unlike other loan products. You can repay early and draw more credit out at will, making it more flexible than other financial products that use the equity in your home as collateral. Personal loans and remortgaging your home would charge interest on the entire loan value from day one, while interest on the HELOC is only applied to the amount of credit you have actually spent. HELOCs are not widely adopted in the UK, but there are now a few independent lenders offering HELOCs or other home equity release products across the country. HELOCs have varying interest rates depending on your financial situation, the equity in your home, and the lender's acceptance criteria. In general, HELOCs offer interest rates somewhere between a personal loan and a remortgage, with the latter being the best option. HELOCs can be more financially attractive than a remortgage in the long term, as you only pay interest on the credit you have actually spent. At the time this video was made, HELOC interest rates in the UK were ranging from about 2% to about 10%, with independent lenders offering higher interest rates due to the low availability of HELOCs. HELOCs may not always be the best option to borrow against the equity in your home. If you need credit but don't want to spend it all at once, a HELOC could be a good option, as you can draw out the credit slowly, spending only as much as you actually need. However, if you want a significant lump sum of cash to make a purchase and want to keep the interest rates as low as possible for the entire loan's value, then a HELOC may not be the best option. HELOCs can have downsides, and one of them is the temptation to overspend since you have a significant line of credit to draw on. As mentioned, HELOCs are not widely adopted in the UK, but as they become more common, interest rates are likely to drop. If you are considering a HELOC, you should weigh up the pros and the cons carefully and decide if it's the best option for you. If you're interested in finding a loan for your circumstances, then simply click on the link in the description below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it will give you access to quotes from around the UK tailored to your circumstances. It's totally free to do, and of course it won't affect your credit score. So simply click the link in the description below and fill out the short form to try it out.